Global fund managers warn that China's unpredictable regulatory moves are hurting its appeal to investors. In the longer term, however, they say the crackdowns could raise China's attractiveness. That is, if these measures could generate meaningful reforms that protect data and cut monopolistic practices. China has intensified crackdowns on the technology, property and education sectors in recent months. And things are not looking easier for China's businesses, at least for the next few years. Authorities have issued a sweeping framework that seeks greater regulation on key industries. Now, in their 5-year plan, legislation in areas such as national security, technology and monopolies will be in focus. Authorities will also strengthen law enforcement in a broad range of industries, from food and drugs to big data and AI. And the plan comes during Beijing's ongoing crackdown on the country's biggest tech companies and other parts of the private sector. It's forced investors to dump shares of companies hit by the regulations. One high-profile investor has already called a timeout on investing in China, and that is Japan's SoftBank Group. Founder Masayoshi Son says the conglomerate will pause its investment in China until the extent of Beijing's regulation against the tech sector becomes clear. But for more, we are joined by Chen Jiahe, CIO at Novem Arcae Technologies. Well, Mr. Chen, following up on that, are you seeing big foreign investors cutting the exposure to Chinese equities? And are you concerned about this?
Well, personally, I'm not that concerned about this. This actually gives you a pretty good buying opportunity. We've been looking at some companies in Hong Kong. Well, I can't name the company due to the compliance issue, but when you look at the valuation, you can see some of the very leading industrial player in the technology industry are dropping to their very lowest valuation in the past 20 years. So the valuation is really low if you think about how fast these companies have been growing. So actually, well, you would know that when the price is so cheap, there must be someone selling. So I'm not surprised at all to see someone who says that they're selling everything and they're not investing in China. But that always gives you a pretty good opportunity. I mean, remember at the end of last year, the United States was banning China's telecommunications companies, and that really gave you another opportunities which we engaged in, got something like 30 or 40% return. So we're not surprised with this.
And what is the reason behind this regulatory framework? Also, why now?
Well, the reason behind the regulation is that there really should be a regulation where you look at how the competition and the business has been with these tech companies. There has been a kind of monopoly over there. People are competing against each other really hard. They're pressing down the benefit of their labor. So these things have to be regulated sooner or later. These things have to be done. I mean, it's being done in the United States. The split companies into two to avoid monopoly. It's being done in Europe, which they have fined billions of US dollars. So it's being done in China right now. One of the, well, that probably be two reasons why now. I mean, the first one is that these problems are really severe after so many years of competition in the market. Another thing is that with the COVID-19, the economic growth has been slowing down. So it is the job of the government to bring more benefit to the people. So that's probably another reason.
And Mr. Chen, what are the implications for China? And could these ripple to the rest of Asia?
Well, I don't think there will be a lot of ripple to the rest of Asia, basically because this is regulation towards the market. This is something you see in all markets, which hasn't been done in China for many years, but now it comes. So when you talk about what is going on in China is that people will understand Chinese technology industry will be as much regulated as has been regulated in Europe and the United States. It's no longer a place where you can do whatever you like. When you do investment here, you have to consider also the action of the government in the future. So this is something probably people have to look at.
All right, thank you so much. Chen Jiahe from Novem Arcae Technologies.